All right, back to work. I know, sorry to miss you guys last night on last night's video, but it's about that time of day again here, isn't it? Time to get back to work tonight. It's Thursday evening, the third day of February 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us fund the best trades, setting up for Friday. Not just any Friday, non-farm Friday's trading session. Got a great video in store for you guys tonight. Charts are already in the background, as you can see. Got the E-mini. Oh, the NASDAQ's here, and the oil is here as well. Glad to see you are here, ready to go as well. Boy, where do I begin? Lots of great trades on my radar for Friday's trading session. Got some big moves on the charts today. Got some big news early tomorrow morning. Big moves today. Big news tomorrow morning. Usually a recipe for some great trades in the following trading session. I got a bunch of great trades we're watching for tomorrow. I'm going to cover all my favorite trades in tonight's video. We'll also cover some stuff to avoid to keep yourself out of trouble, help you finish the week off in the green tomorrow on Non-Farm Friday. As always, before we jump in and get this video going, make sure you subscribe to our YouTube channel. I publish this video every evening during the week. I don't want you to miss tomorrow night's video. Make sure you subscribe to our YouTube channel, hit that little bell icon because a lot of this stuff is very time sensitive, right? So make sure you subscribe so you keep up with the newsletters going forward. Also, if you guys have any questions for me tonight, drop those questions in the comment section. I'd love to answer any questions you might have along the way. And if you enjoyed this video as much as I enjoy making it, if you tune in every evening, hit that like button for me. Really appreciate you guys carving some time out for this nightly newsletter. But enough of the intro though. Time is ticking. Friday is right around the corner. Let's get ready for Non-Farm Friday. Now, boy, oh boy, where are the best trades for Friday's trading session? Get a lot of bulls this afternoon. You'll notice everything really very bullish here right now. There's no doubt about that, right? Buyers have control of a lot of the short-term momentum right now. But I'll tell you, the more we look at these charts, the more difficult it is to find a way to get long on this. Buying at these points right now, we're way too high up to be buying. I would love to look for some shorts off this high, right? Shorts off this high. The oil is definitely the big variable. Oil is a very bullish market overall right now, as opposed to the S&P and the NASDAQ. I would love to short the oil and then pick it back up and buy it back up. We'll talk about why I say that as we go deeper into this video tonight, though. So if you're an oil trader, you definitely want to stay tuned on that. I think we can play both sides of that oil market here for tomorrow. But again, looking at the S&P and the NASDAQ right now, absolutely we are very bullish in the short term. But once you kind of see what I'm looking at here tonight, you'll see why it's very difficult to justify being a buyer. And again, I'm going to break down my favorite trades for tomorrow, and that way you can trade right along with us as you're doing on your own or you're joining us in the trade room. S&P, NASDAQ's already Friday, Non-Farm Friday. Why don't we grab a look at the schedule here first, though, because tomorrow is not your average Friday. It is Non-Farm Payroll Friday. 8:30 is the big news of the morning here tomorrow. You know, generally speaking, whenever you have the Non-Farm Payroll report on Friday, generally the overnight, that Thursday evening, is usually a little bit choppy, a little bit quieter because such big news coming on Friday. So anytime we have Non-Farm Friday, I always can try to warn you guys, be careful in the overnight session. If things aren't moving very quickly, you know what they're waiting on, right? They're waiting to hear that employment number. Now, don't forget, speaking of employment numbers, we saw a very dismal employment number on Wednesday, right? They were expecting like a plus 150. They got like, what, a negative 300. So they had a very big disappointing number come out in the ADP on Wednesday. And of course, that will take us into Friday now. Will it be as disappointing on Friday morning's news? I don't know. But we definitely do anticipate there may be a bit of a punch in the gut as far as the employment number comes on Friday morning. So definitely be careful in the overnight session. If we don't see a lot of personality, just give it some time because everyone's waiting on that employment number. Next, don't forget that 8:30 news comes out tomorrow morning. We oftentimes do see a lot of chop, a lot of back and forth. Oftentimes by about 8:40, 8:45, things will calm down. So don't force trades again in the overnight. Don't force trades around the employment number. By 8:45, 9 o'clock, 9:30, though, hopefully things will have settled down and we can start finding some of the best trades of the session in the trade room. And also, too, don't forget, tomorrow, Non-Farm Friday, be patient with your trades tomorrow, because Monday, the following Monday, is called Reaction Monday, which is oftentimes some of the easiest trades that you're going to get, right? It's not the day of the news, it's the day after the news. We have those Reaction Monday coming next Monday. So be careful overnight. Be careful forcing trades around that non-farm payroll number. The bulk of the good stuff tomorrow will likely be coming 8:45 and later. And again, don't force trades tomorrow. Don't force bad setups, because again, save your bullets. You're going to probably get a lot easier trading that following Monday, right? That comes afterwards. Now, of course, that does not mean we can't find some good trades tomorrow in the trade room. Let's go back to our charts though. But we know though, again, in the overnight session, be careful overnight. Be careful leading into that news. Make sure we're getting good personality. And if you don't know what good personality means, definitely make sure you come out and join us and do it with us in our daily trade room opening up at 8 o'clock Eastern time. Let's get the charts put together here, and you can kind of see what I'm looking for here for tomorrow. S&P, NASDAQ. S&P and the NASDAQ are pretty similar tonight. Oil, of course, is kind of the oddball of the group. Why don't we jump first, though, into the S&P? A lot of what I talk about on the S&P will apply to the NASDAQ, and vice versa. What are the main components right now on this E-mini? I think one of the main kind of factors on this chart right now kind of actually begins yesterday evening. We had that big sell-off to finish off the day yesterday. If you look at what this is, it's basically, the way that I see this market right now is, it's just one big spiking channel. We saw the market a blow lower here. You would have thought this would have given us a much deeper pullback, to allow sellers to really get in at a good price there. It never came. And so to me, this just looks like one big pop down and kind of a big grind running lower. The bears, of course, take their measured move out, and we see this big profit-taking rally going higher here. There were some earnings reports coming out this afternoon, which, of course, Amazon led the way, but that, of course, will be for the NASDAQ. So a lot of this, we assume, is just profit-taking there for the bears. And if you've noticed the last few weeks, we've seen a lot of these big moves down, big pops up, and we see them just come right back down and retest those lows here. So I look at this again as basically one big spiking channel. And if we know anything about spiking channels, we know spiking channels love to get these deep pullbacks, trapping the buyers in this case, and short it back down again. I think that is a very big part of what my game plan is for tomorrow. Also too, very strong move down today. Anytime we see a real strong move in one direction, we expect there to be a retest of that level, right? And we've got that, right, kind of that low down there marked up for our retest level. Now, at the same time, you can definitely see there's a lot of bullishness in this most recent push here. But what do we always talk about when it comes to pullbacks in a trending market? They have to hold the pullback. And so right now, this is just one big pop off the low. The buyers have to hold this pullback to really get our attention right now. We see a lot of times where bear markets will pop up above the moving average. The buyers will try, but they soon fail, and we keep returning to that overall trend here. So that's why I say it's very difficult right now to find a way to get long on this. I'm not going to be buying it as it goes higher up here, because we're running into overhead resistance, we're running into triangle resistance, pendulum swing resistance. It's just very difficult to find a safe spot up here to get long on this. Now, I definitely do think we'll have some spots here for the long side, but they've really got to show me that this is more than just a profit-taking bounce right now. I would personally much rather have the short side here. I think that's going to be the easier side to make your money on, at least for now, at least until we know more about tomorrow morning's news report. So knowing that, what's my plan of attack to kind of short off this top right now? Well, we have this big bear move down, so we know where the market wants to go. The bears want to get back down to that low. The bulls would like to probably get back up around this triangle high and this pendulum high. It's a very strong bounce. There's a very strong bounce off that low. And of course, every time we have a strong move in one direction, we anticipate, right, a retest of that high. So I'm going to try to short this thing, or at least look for a short setup, and then see if we can rope in those buyers and run this thing right back down to those lows again. Because this push higher is so strong, the key will be to use what we call the two-try failure. So the best way for me to want to short this thing is to literally trap in these buyers, let them try once, Let them try twice. And of course, once those buyers try twice now I have their stops, right? The stops are basically sitting right below that low, and I can short now into those stop losses. Now remember, this is not the end of the process. We can now mark up that low now. We can mark up the high of a channel, and we can now look for that short right off the high of that channel. So again, it's going to be a 1-2 try failure. The reason why I want 2 tries is because of the strength of this pop, right? It's a very strong pop there. So give the buyers the benefit of the doubt. I still want to sell short on it. 1, 2 for the buyers there. Look for that nice strong signal candle. We can get that drop, right, going back down to those lows. At the same time though, mark up that low, mark up that high, and look for the entry off the high of that channel, right? So we call it 2 try failure, right? 2 try failure, and then of course that first test off that channel. One thing to keep in mind too is if this market was to really collapse back down again, right? Let's say it was to something like this, where it really collapses back down now here. If it does collapse back down, now what you want is a trap entry, right? That trap entry will be really, really important there. Does it make sense, right? So if I can get up here, if I can get these buyers coming in, trying once, right, trying twice, I can draw that hidden channel off that, right off those lows, short there. I can definitely grab that trap right above that high. There's a bunch of different ways in which we can take that 2 try failure off the high. And then as we start to go lower here, remember, it all depends on what price action entry that we get, which setup that we get for the short. As we go lower here, right, grab that little prior swing, look for those traps, right, those failures, those pullback combinations, right? So 2 try failure, and then we'll have to see, we'll have to kind of wait and see what type of entry setup we get off the high of that channel. Oftentimes they're traps or failures or pullbacks, right? These are the same price action entries that we talk about in the free trading course. I know a lot of you guys have already grabbed that free course yet. You've already learned all of the entry techniques that we use in our trade room. If you haven't done that yet though, if you haven't grabbed the free trading course yet, I would definitely encourage you, grab the free course. I'll put a little pop-up there for you in the upper right-hand corner. Grab that little link that popped up. That will teach you the entire roadmap that we use in our trade room, not only to find the right levels of support and resistance, but to also trigger the entries with our price action setups. We don't use a lot of indicators. We use price action, and you'll learn the entries, the exits, and most importantly, you'll see hundreds of examples of how we apply those setups to our favorite futures markets, all included in that free trading course. So definitely grab that in the upper right-hand corner. And then again, if it does, if it does start to really kind of collapse here, then you really want that trap, right? You really want that trap as we go here. That's how I'm looking to short this thing, right? As it goes lower. What if we go sideways here right now? If we go sideways right now, not a lot changes. And we already have a couple of ranges here already. If we go sideways, same thing. Get up above the range, use that 2 try failure, 1, 2, rope in those buyers, right? It'll look just like that, right? Pop up, buyers once, buyers twice, short back down into that trading range. Get those buyers caught above that trading range, and then hit them, right? Hit them with that short coming down off the high. And then don't forget, at this point now, this slingshot now running lower, the bears, they want to take out those lows now, mark up that new channel, drill down, right? Find your entry setup. You'll learn those in the free trading course, right off the first test of that channel high. All right. If we keep going higher here, again, not a lot changes. I got a range below us. Ranges are magnets. Areas of resistance up top here, overhead. My problem right now is I do not trust this pullback, right? I do not trust that pullback. They haven't pulled back yet, right? Again, they've got to hold that pullback to prove to us they have control of this. They haven't held that pullback yet, so I just don't trust that pullback here. And even if they do get that pullback, right, here, it'll put us right up around this pendulum swing. So I'm still looking for this pop up. I'm still watching now for those buyers to come in, right? Try once, try twice. Again, thinking about where those stops are, right? And shorting into those stops, and then grabbing that new channel, right, for that short on the way back down again. Failure, and then we'll find the price action entry right off the high of that new channel. The one scenario where I do start to look for the long side here is if we can get this thing to go up, hold, and go. right? Which, as you can see, is going to take a small miracle here right now with all of this area of resistance. Now, again, we get some big news tomorrow morning, so it's not completely impossible here. Again, I look at this as one big move down. The bears want to come back to retest that low. But let's say, for example, they do end up creeping all the way up higher here. They run to the highs, they're into this area of resistance, and then they go out, hold the pullback, and go from there. At that point, we will have to bite the bullet. Trust me, I don't want to miss out on that pullback, but again, I think the short side here is definitely going to be the more reliable side right now to be a buyer. If they can give us a 1, 2, 3 move off the moving average, remember, it does not matter how strong the pullback is. They have to hold that pullback and jump off the moving average. So if we can get up here into these areas of resistance, if the bulls can come in and hold that pullback and jump, well, now we don't have much options, right? Now we know we're bullish now. Yes, it's tough to miss that move higher, but hey, that's the way the ball goes. That's where the game goes sometimes. I'm going to mark up that high. I'm going to mark up that low. And you'll see a lot of examples of these in the free course that I mentioned earlier. That trap, that failure, that pullback combination, right, coming off that low. Trap below prior swings, failure around the moving average, and that pullback combination. Where would the buyers want to get to at this point? It's pretty easy. The buyers want to go back to retest that high we saw 2 days ago, or yesterday, I guess, right? It's an evening, right? 45.86 basically is that high. Again, though, not going to be easy, right? It's not going to be easy here. The buyers will have to show up here and hold this pullback. There's a good chance this will be nothing more than just a profit-taking rally or a short squeeze coming off this low here right now. So that's the game plan I have here on the S&P. We'll see what tomorrow brings here as far as news goes. Let's grab some NASDAQ here now, shall we? Grab the NASDAQ here. NASDAQ is very similar to the S&P in the sense that I'm really looking at this like one big spiking channel, right? All begins when we get that big Facebook, right, getting crushed on earnings. The market basically just spikes down and grinds down the entire time. Now, when you take our video classes here at School of Trade, you're going to learn about spiking channels. Spiking channels love to pull back into the base of that channel. So it makes perfect sense right now that you could get this thing to pop up and come all the way right back down again. You also can see here, and it's the same thing for the S&P, if you draw a simple trend line off these lows, bring up this highs here, you can see there's a lot of reasons to look at this as one bigger channel here. And so again, combine that with your falling resistance, combine that with this range acting as a magnet. It's just very difficult right now to be a buyer on both of these markets here. So not a lot's different here on the NASDAQ as the S&P, right? We're definitely bearish overall. So we know we have this big push up off the low here. That is a ton of momentum for the bulls. I mean, pretty much takes back the entire move here. This is how these markets have been lately, though. The markets made these big moves down. They've kind of almost reversed going higher, deep retracement, deep correction going higher. And again, I'd like to see if these buyers can fail and get that short right back down again. Looking at this as basically one big spiking channel here. So again, not a lot is different here. I'm going to use the 2-try rule, right? Trapping those buyers. Buyers try once, buyers try twice. Now again, maybe it's a trap off that high for the short. Maybe it's a hidden channel, right? For that short. We see a lot of different variations of this particular setup, this 2-try failure. The bottom line is wait for the buyers to try a couple times. Think about where their stops are, right? Think about where their pain is. Think about where those buyers now really get into trouble. That's where you want to be selling short, right, off the high here. And then don't forget, as we go lower, right, remember, the bears want to go back down to retest that low, right? That's their objective right around last Friday's close. It's amazing how the prior Friday's closing price all of a sudden becomes a big magnet for those bears. Same thing on the oil, same thing on the S&P as well. Watch those Friday closing prices from last week here. So again, 2-try failure off the high, mark that new channel. Look for those traps, right? Those are almost always where the money is. Right, grab that failure, grab that trap. Again, get above the moving average for a failure setup, pullback combination, right? 2-try failure, right? Trap setup, failure setup, pullback setup, targets, back down around that low. And again, I'm just simply drawing on the screen right now. You'll learn all the rules of these setups inside of that free trading course. The one thing I would really be careful with here is let's say, for example, the market, like I said, like I mentioned, the S&P, let's say we end up sliding back down, easy come, easy go, right? If the market, like in the S&P, I talked about how if they slide lower here, to look for that, right? To look for that trap, right? Like that could be an easy variation of a two-try failure. The key is we just don't want to get roped into selling it as it goes lower. A lot of times there'll be a channel coming down right off those lows, and you can really get a good short there on that, right, on that trap. So definitely watch it if it just V-tops here and comes back down. And also, too, this could easily end up rolling lower and grinding down, right? Grinding down. That happens quite a bit, too. Mark up that low in that case, mark up that high. And again, right, think about where those prior swings are. Get above those prior swings, ideally. Sometimes they don't have those on the chart to use. Trap setup, failure setup, pullback combination. And again, we know where the market wants to go, looking to sell off the high of that hidden channel. All right, so those are a couple of ways, in addition to the S&P analysis, to short this in the NASDAQ. Again, if we go sideways here, not a lot changes. If we go sideways here right now, as we push higher here, this range is still going to be a magnet for us. I'm going to wait for those buyers to come in. It will be, again, it's still a very bull market at that point. Not a complete reversal yet in my eyes, but it's still going to be a bullish, short-term momentum. So let those buyers sort of push it higher. Let those buyers try a couple times, and we can look for that short back down again. And then remember, the pendulum swing on this one's probably not going to hold. Same thing on the S&P too. I'd be surprised if this thing whipped lower. I'd be pretty surprised if it held that pendulum swing. You know what I mean? Just because of this big move down, right? So again, as we drop off these highs here now, think about now where that new channel is and grab that first test. We call this trading the rotation, right? Trade the turn. Two-try failure off the high, and then as it rolls over, we grab that new channel and look for that short off the high of that channel. And again, we're not just simply blindly selling it short, right? We're looking for one of the entry setups that you guys learned in that free trading course, right? And again, if you haven't grabbed it yet, definitely grab that free course linked up in the upper right-hand corner. That way you know the entry setups, you know the rules we're going to use, and you know which ones to avoid. All right? That's going to be another easy way to short off the top there as we go. And honestly, even if we go higher here, I want to make that very clear. Even if we go higher here, this could be seen as just one big spike in channel right now. And so we could easily end up being well above these highs here, right here, and still looking for that short going back down again. The moving average is way down there, right? So until they can hold that pullback, we really can't trust these buyers, at least as far as I'm concerned, until something really dramatically changes here, which again, we have some news tomorrow morning, so that would be enough to be a catalyst that could change this, but got to wait for the proof here, right? We are not in the prediction business. We're in the trade what we see business. And right now what I see is a big move down that really never gave the sellers a good chance to get short until now, right? Until now. So if we go higher here, same thing, right? Same thing. Let those buyers try once. Let them try twice, right? Grab those stops for that short. And then again, hit that new channel and grab that short from there. If it's and this, as you can see, this is a pretty big pendulum swing here. If we were to push up above this area here, hold this pullback and start to get a nice strong run going higher, I will be looking for longs up here because that 15,000 big round number will likely be a big juicy magnet here for us. The hard part's going to be though is we're going to have to get in before we get up into these highs here. You won't want to be buying into that 15,000. You'll want to already be in that trade long here. So again, the hard part's going to be that even if we do see it pull back and try to go higher here right now, we're still running right into major areas of resistance according to that spike in channel theory or spike in channel analysis I talked about earlier. So even if we do hold that pullback, right, 1, 2, back down again. Now, if they hold that pullback and we start to really run here, now if we start to see some explosiveness, right, some short squeeze going on, that's definitely where I can start finding that new channel, right, drill down to my faster time frame and go looking for that first test off the low of this channel. Again, all this stuff applies to the S&P as well. The NASDAQ definitely looks like it has a little more potential for the reversal just because it went lower today. But again, I'm still looking for the sell side here until something proves me wrong, right? Until these buyers can hold this and really push through this area up here, right? Going to be a little bit of a thread the needle, right? We have to see it kind of push through, hold that pullback, and then we can drill down, find that trap, find that seller failure, find that bullish pullback off the moving average, right, to buy off that first test. And then where's my target on that going to be? The target on this, like I said, I would imagine 15,000 to be a big round number magnet. This pendulum swing at 15,054, if you will, is definitely going to be an objective. And then another way to kind of fine tune your target is to use that leg right there, right? That's kind of the breakout leg here for the bulls. And so that leg right there would be useful for the measuring leg, right? So again, we pull back, we blast higher here, right? We blast higher, we find that channel, we drill down, grab our entry there. It's this first leg right there, that first leg and that leg, that'll help you kind of fine tune where that big target will be up overhead. All right, guys. But again, be very careful buying up here. It's really got to get up, hold that pullback, and really blast. Then I can mark up that high, mark up that low, drill down to my faster time frame. This is a 5,000 tick chart. Right? We won't be trading that in the trade room tomorrow. Right? We'll drill down to our faster time frames. Right? Grab the entry off the low, traps, failures, pullback combinations as we go. And then again, this leg right here will be your measuring leg going higher. All right, looking pretty good there. Pretty straightforward, I think, there on the NASDAQ. Again, both of these markets, S&P and NASDAQ, are pretty similar here. The big thing right now is be careful overnight and be careful the pre-market, too, because of that big news report that we have here at 8:30 Eastern Time tomorrow. How about the oil here? Wrapping things up here on the crude oil. What's the deal with oil right now? Well, we're obviously very bullish. This is a very bullish market. But I'll tell you, this is a very big move higher. Very, very big move higher. Anytime we see such a big move in one direction, right? Anytime we see such a big move higher like this, you have to think it's going to require a little bit of a deeper pullback to attract more buyers in, right? So my battle zone is right here, right? My buy zone's right here, but I don't know. That looks to be a little bit too shallow for most people. You know, I would imagine that most buyers right now they're gonna be a little bit hesitant to be buying a shallow pullback on such a big move higher here. So one very important component here is the size of this move here. You know, that would suggest a deep pullback will be what most buyers are looking for. Now, at the same time, combine that with another fact that we've seen lately on the oil, and that is oil has pretty much been doing this the last few weeks where it's made these pops up, it's made these significant corrections, and then made its way back up again. So if history keeps repeating itself here, this is a very big move back up, right? I would imagine we could get a very sharp correction before the buyers start to regain, right, and retest that high here. That's why I said in the introduction today, I think we could probably play both sides of this market here. Sell off the high and then pick it back up around that 88, 80 range down there and look for the retest of that 90 area. We know we get a new range up here, right? Get a magnet there. I think the biggest variable right now is going to be this trend line. This trend line, probably the biggest variable. Now, we talked about the two-try failure pattern on the S&P and the NASDAQ, right? So the market goes up, the buyers try once, buyers try twice. You could definitely see how this trend line could really be the key to our success there. Now, sometimes we don't get that trend line test. Sometimes it'll simply 1, 2, right? And we don't actually get that full trend line test there. So that'd be the ideal. The ideal would be to use this trend line. Again, very bullish here right now. So for me to want to sell a market like this, I have to be very patient. I want to let those buyers try twice. You know, same thing we talked about on the S&P and the NASDAQ. And the reason why I want to sell short is because of those two components. One being the sheer size of this move, right, usually means we're waiting for a deeper pullback to attract more buyers in. And the next thing is, it's just the personality of this market. This market personality the last few weeks here, lots of big pops and really deep corrections before they go back up and retest the high. So again, we'll use that 2-try rule, right? The 2-try failure. 1 try for the bulls, to try for the bulls, right? Think about now that short off the trend line. Think about now where stops are. Stops are right below that low, right? The easiest money you're ever going to make is when you're getting in short and the buyers are caught, getting in, they're caught long and they're getting out of their long positions. So once we see that nice strong signal, that's your to try failure. And then again, I would love to grab this thing going lower here and then hit that new channel and short that channel test. These are very, very reliable setups, right? So that will take us down to that low. Then what I want to see is I want to see how we kind of how we react to this 88.74 area. Now, I could easily see this happening. I could easily see the buyers trying once, buyers trying twice. We get that short, right? And they keep on grinding down. That could easily happen here because there's last Friday's close. It's a big range down there, big magnet down there, 87, 50 area, 87, 60 area. They would love to drag this market back down again. So it's definitely not out of the picture for a short off the high, and the market then kind of collapses and begins to grind down here. When that happens, what do? You mark up that trend line off that low, off the lows, you bring up the highs there, you find that new channel, and you wait for that first test, right? You mark up those prior swings, wait for that first test, get above some of those prior swings. That'll be your trap setup into your failure setup, pull back and go. Remember, the size of that first leg, that'll be your measuring leg, right? So that leg and this leg will usually be very symmetrical. Okay, that'll give you an idea of kind of how to fine-tune that final target as we go lower. And again, you can see Friday's close is right there. 87.29 is last Friday's close. You have to think. I mean, they've been obsessed with that price all week this week, right? All week we've been dancing around that level, right? You can see it's been all week this week, dancing around it all week. And so it just seems very logical the bears will want to get back to it here at some point here tomorrow. Now, how do we buy this market? There'll be some ways to buy this. Let's see here. Yeah, and remember too that even if we do go higher here, this becomes a range, right? Even if we do go higher here and pop up, not a lot of this changes. Really, it's all very similar, right? 1, 2, get underneath that trend line and back down again. Not a lot of it changes. Now, in fact, if it pops up and comes back down again, it's almost even better for us because now we have that pendulum swing. It almost gets even easier for us if we can pop up and start to fail and come back down again. Because now we have that big momentum swing off the top of that trading range. So definitely don't be afraid of it if it pops up. Wait for the to try failure, obviously, right? We're not just simply selling into this bull run higher, but that's kind of the idea behind it as we go. How do we buy this market? I think one thing that we'll watch for here is if we hold this range for a while. If we spend the entire overnight session going sideways, rotating back and forth, the longer we sit inside that range, the more of a magnet it becomes, right? So the longer we sit inside that trading range, the more difficult it's going to be for us to short off these highs. So ideally, we want to get that short pretty quickly here. If it starts going sideways here or continues going sideways here, now what you want to do is just wait for that nice deep pullback. Again, the market will probably give you a pretty deep pullback. I don't anticipate it to be a very shallow pullback here, just because of the way this market's been behaving the last few weeks, right? Big pop up, almost goes too far, if you will, right? Quote unquote, too far. And then, of course, we wait for the price to pull back to a nice deeper price, right? Once it pulls back deeper price, we now use that to try failure. Right, we rope in the bears once, bears twice. We get those bears who are trying to sell this thing back down again. We get them to trap in, and we buy into those stop losses. So that's one scenario to keep in mind. Again, if we do start to stick and go sideways, the longer we spend in that range, the more difficult it's going to be to short off those highs. Right? So if we sit there for a while tonight, get a big, fat, juicy range there, then what we'll do is we'll wait for that nice deep pullback. You want that deep pullback because this move higher was so large today. Think about how, think about what's it going to take to attract more buyers in. It's not going to be a shallow pullback here. We're at $90 a barrel for crying out loud right now. So wait for the price to pull back, rope in those bears, right? Rope in those bears, and then again, hit them right where it hurts with that failure. Okay, that's one way I can buy this thing. Also, too, I can buy this as it goes or after a collapse. let's say, for example, right, we get that 1, we get that 2, and that short back down again, right? We stall out here now, right? Now, of course, we come in. Now the bears are trying once, right? The bears are trying twice. Got some rising support here, right? There's a good chance this thing goes right back up again. So again, a 2-try failure off the high, right? We stall out at an area where I think you're going to see a lot more buyers coming in, right? There's also the prior high of that range from yesterday. Again, we can't just buy into it down here because it's such a big move down. So we use that 2-try failure pattern, roping those bears twice. All those stops now are sitting right above that high, right? We can buy right into those stop losses. So a pretty easy game plan there. A little bit tricky, a little bit more advanced here, but I don't think it's that bad. I think right now, though, I think understanding what oil's been doing lately, combine that with just the sheer size of this move here, and I definitely think there's opportunity both to sell it and to buy it. What I'll be most interested to see is first of all, do we end up really going sideways more tonight? Right, because the longer we stick to that into that range, the more difficult it's going to be to get the bears involved here, right? It'll pull back and go right back up again, right? Or do we see a 1-2 back down and have it kind of just slice through this area here, and we find that new channel, right, and sell that pop from there? And again, much like I talked about in the S&P and the NASDAQ, right? If this thing was to fall apart right now, really fall apart right now, definitely keep an eye out for traps. Right, definitely keep an eye out for traps. Find those channels off those lows, bring them up. Right, hit that first test. I'm not afraid of that one at all. That looks pretty good. All right, and then if we were to let's say for example, if we were to really sharply pull back right now, right, and then bears try once, bears try twice. That's a good looking long, right, back in that range here. So same idea we had before, right? So again, if we go lower, it starts making lower lows like this, yeah, find that channel, right? Look for that. Look for that short. But if we collapse off the high though, we start making higher lows here now. Yeah, now that 2-try failure is setting up here for a move back up into that range. All right, guys. I'm sure with some big news tomorrow morning. I'm sure I've missed something in the charts tonight. As always, though, don't forget every morning 8 o'clock Eastern time in our trade room. Right, we'll prep the charts and we'll trade this strategy together tomorrow morning in our trade room. Speaking of trade room too, I'll put all the details you guys need. I'll put all the membership links. I'll put everything in the description of the video here for you guys tonight. Don't be afraid to call the office if you guys have any questions. I'll be here to help out with questions about brokers and charts and data, or if you want to get access to our trade room, I'll be able to give you more information there as well. But again, all the details will be in the description of this YouTube video. If you're on the blog right now, there'll be a big button for you right below me tonight on the trading blog. All right, guys, I'm out of here for now. We'll see you guys tomorrow morning in the trade room. If not, same time, same place back here next week. Got the second week of the month of February next week. So remember, like I said earlier, save your bullets. Save your bullets if we don't see clean setups tomorrow, because Monday is Reaction Monday, and we'll see you guys back here for Monday evening's nightly newsletter. As always, guys, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.